a storage facility is pretty simple.
It can be,
right.
with the
Yeah.
right setup.
Yeah. I mean, if you don't have climate control, you don't have pipes behind walls, you don't have a lot of these things that you end up with challenging issues that all of a sudden I had this leaky pipe that, I mean, we were dealing with the other day, right? You see the growth trajectory and the opportunity. A company like Public Storage in 2022 looked to invest $1 billion into self-storage. So money is starting to flow into the space. It's starting to get more publicized of the financial impact and the sexiness within self-storage.
Yeah.
And people are starting to recognize that and pick it up. And so I think the opportunity is really right now for us to go after and make it happen. All right, what's up, man? How we doing?
Dude, great, man. How are you?
Yeah, doing great.
Nice, man.
Sitting here in your office.
Yes, sir. Lincoln, Nebraska.
Here it is, man.
Yeah. Thanks for coming out here, bud.
Hey, it's good to be here.
Appreciate you having me on.
Yeah, this is my first time to Lincoln.
What do you think?
Yeah, great place.
Beautiful, huh?
Yeah, shit football team, but
Who?
the area is nice.
Who's the shit football team?
Oh, the Cornhuskers?
Oh,
Yeah.
Now we're talking shit, huh?
Yep, the Lady Cornhuskers.
Not a good dude. You don't want to do that here, bud.
Oh,
We might
here
get
we
beat
go.
up. We might get mugged, harassed.
I know.
Probably good for you though.
You guys went 0-10, 0-11 last year?
You might get beat up.
Yeah.
It's okay. You could
They
use
won't-
it.
Yeah, they won't touch me. Anywho, let's talk about self-storage. It's been a focus for us here lately. Got a property under contract today, but just wanted to kind of walk through with the group here why we're going after self-storage, why we think it's sexy, and maybe just kind of lead us off. What has been attracting you toward self-storage?
Really the first thing that got me interested in it was the amount of automation that can go into it, along with lack of having actual tenants living in units. So as you guys may or may not know, we own quite a few single family rentals, apartment complexes, and tenant issues, the leasing up period, the maintenance issues that come up, turnovers, things like that. So it can be a lot of work. It is a lot of work. And especially when tenants beat up units and or you have to evict them because they're not paying rent. Those are processes you have to go through that take time, take money to take care of. And with self-storage, what was really attractive to that was, again, tenants aren't living in there. When a tenant doesn't pay, you can automatically lock them out, depending on how the facility's set up, but you can do automatic lockouts on them. And then when they move out, if they leave some stuff in there, you do a quick auction, get their stuff out. All you have to do is do the auction, sweep that thing out, and then it's ready for the next tenant. Versus a single family or multifamily, oftentimes you have to go in, you're doing touch-up paint, you're doing cleaning, you're doing other repairs, things like that. So there's a lot of stuff with self-storage that we'll go over today a little bit that really makes it attractive compared to other asset classes that we've invested in.
Sure. Yeah, absolutely. Because like you said, historically it's been single family, multifamily, and the growth was from single family to multifamily. And now we're saying, okay, let's really dive into this self-storage thing and go after some new opportunities there. So yeah, that one was a big one. Tenant rights, we'll call it.
Yeah.
And the ability to just put some automations in place that if somebody hasn't paid you, it automatically shuts them out. It's not even a conversation. It's just you haven't paid, and you'll get the gate opened again when it is paid, right? Yeah.
Pretty simple.
That's pretty ideal. You own real estate. That's kind of what you want in life, right?
Yeah, absolutely. So you want to chat a little bit about the demand, I guess. Let's start off with the demand for self-storage.
Yeah, so the financial piece is really an attractive part of it as well. So you look at the S&P 500 over the last 25 years, hovers around a 7% return. You look at office space, retail, it was right around 12%. Multifamily is around a 12.9% IRR, so internal rate of return. And then you look at self-storage, and it's right around 16.9% over that 25-year period, average IRR. So you look at that, and historic numbers show that this is a highly profitable asset class. And so with that, it looks quite attractive and interesting, in combo with those tenant rights. The other piece is really the timing of now in comparison to, say, years past or in the future, whatever the case may be. But that demand driver is quite interesting time, an inflection point, I would call it, based on the idea with COVID and work from home situation that people are now working from home more frequently. COVID sort of pushed us into that environment of allowing more work from home and work from anywhere. And now I could go put my stuff into storage and go travel around. Millennials are kind of in that mindset. Gen Z, similar mindset of wanting to go and experience the world and not necessarily be constricted to a single location.
Yeah.
So I think that's kind of like the timing is now, and it's right. There's 10,000 baby boomers retiring every single day. That's another piece of it. So you end up with people wanting storage. They're moving. They're going away to college. They're downsizing their, let's say, either house, or could be even an office is downsizing. Or on the flip side, so that's in let's say a recession environment where people are downsizing. The other environment is when people are adding additional capacity. They want some extra space. We were just touring the property that we have under contract now that is talking about this expansion of a business where they buy materials off of semi trucks that have crashed on the freeway, and they can't basically now go just deliver that same product. It has to sell into somebody like this and then goes and resells. Super interesting business model, but he's expanding and needs more storage units. So you look at those demand factors, and it is really attractive. You're recognizing that a lot of these units are fully sold out. You look at RV storage, boat storage, those are all super high demand opportunities. So from the financial piece, it is really attractive sector within real estate.
Yeah, and I think oftentimes too, the price point of renting an actual unit is fairly cheap in the scheme of things, to where it's a lot easier for somebody if they're downsized, instead of, hey, I need to go through all this stuff, and most of the stuff probably that are in storage units should be sold. A lot of people put stuff in storage units, don't look at it for sometimes years.
Sure.
But it's a lot easier. Just, hey, I'll pay this $80 a month for this unit, and I'll just put all my stuff in there, and I'll deal with that later. So I think with the price points that a lot of units are at, that will continue to drive demand for people to, like you said, be able to downsize, put stuff away, and kind of forget about it for a bit. Yeah,
absolutely. And I'll call it sticky. So the minute that somebody has their junk, or treasures into the facility, you don't really want to move it, right? It is a hassle and a pain to go and move from a storage facility to somewhere else because it might be cheaper or whatever the case may be. So with that, you can increase rents consistently if that's what your strategy is that supports it within the market. But you can keep driving rents up, and people retain their assets there because it's a pain in the butt to move things, right? Whereas long-term rental, you're locked in for a lease for a year.
Yeah.
You're not continually raising rent until that lease is up. So that is another piece of it that you can start to adjust with the market, adjust your overall rates, and increase your income consistently and more inflection points along the year.
Yeah, having that flexibility where the tenants are only renting the units for 30 days at a time, sometimes signing longer contracts, but 30 days at a time, having that flexibility to adjust rates as need be. And we've seen oftentimes when we've been underwriting deals, just again, the demand for self-storage in the area where facilities are 100% occupied, and then the facilities we're looking at aren't quite at 100%, but that vacancy, because there are vacancies, it does allow you to start to push rents fairly quick if you want to be able to adapt to what the current market's at.
Yeah, absolutely.
What would you say attracts you the most to self-storage? Is it really the returns that you've talked about a bit, or the automations involved, or what's your side of
the ease of management is an attractive piece. So you and I have talked about growth and strategy and what we really see a future looking like. And that future is continuing to add assets, grow the portfolio. But we don't really want a team of 50, 100 people to help us manage that. You're then managing the people and the team. And if that's the strategy for some folks, that's awesome, more power to them, and that's great. But for me and you, we'd rather kind of focus on growing the business, but not adding a ton of resources.
Yeah.
And with that, you think about multifamily is always going to have multiple touch points. No matter what, there's going to be things that will go wrong, and you have to have those systems and processes in place to help you manage that. But it comes down to someone, a human being at some point in that process. With self-storage, we recognize that we can continue to grow a portfolio, grow the overall real estate within our investment portfolio today by just continuing to add properties and automations and softwares. And of course, there'll be some human involvement across the way, but there's a little less touch points. The tenant rights piece is really a big one for me. And then financially, you're finding a lot of these self-storage facilities as mom and pop owners. Within self-storage, it's about 80% mom and pop type owner and 20%, let's say, retail investment, larger scale. On multifamily, it's a flip. So you have a lot of the big guys, maybe 80% are, let's say, the retail investors, and then you end up with 20% that's more mom and pop. And so that's kind of an interesting perspective because you see the growth trajectory and the opportunity. A company like Public Storage in 2022 looked to invest $1 billion into self-storage. So money is starting to flow into the space. It's starting to get more publicized of the financial impact and the sexiness within self-storage. And people are starting to recognize that and pick it up. And so I think the opportunity is really right now for us to go after and make it happen.
I think it's good that you brought up the reduced overhead compared to, and reduced touch points compared to other asset classes like single family or multifamily, to where, let's say you have a 100-unit storage unit, or you have a 100-unit multifamily. 100-unit multifamily, oftentimes that comes with having an on-site property manager, a leasing agent, multiple maintenance people. It comes with more or less an entire team that you need to run that complex. Where 100-unit storage facility, you can really, with the right automation set up, that can really be run with just one person, the boots on the ground. Obviously, there'll be the back end where people are monitoring the CRM and things like that. But a lot of that can be automated to where the main thing you need is, hey, somebody's moved out, let's go in, let's sweep that out, or let's check on the ground, the mowing aspects, snow removal, things like that is it's dramatically lowered when you just have that one guy, and that one guy can handle, or gal that can handle everything, versus having that team that you need to really operate a 100-unit apartment complex.
And you think about even that team, so that team involves your plumbing folks, electrical, like roofing, all of these things, that different traits that you need. But a storage facility is pretty simple.
It can be,
right?
With the right setup.
I mean, if you don't have climate control, you don't have pipes behind walls, you don't have a lot of these things that you end up with challenging issues that all of a sudden I had this leaky pipe that, I mean, we were dealing with the other day, right? That all of a sudden there's an overflowing toilet on one of the multifamily units that's now starting to flood into the lower units.
And our normal maintenance guy wasn't around that day, so then we had to call our backup plumbing companies. They were understaffed for the weekend, couldn't do it, so literally it took us, both me and you, calling around, and this doesn't happen that often, but calling around for an entire day almost on a Saturday to try to figure out this, what was started out as a minor leak that now is causing some major issues because it's starting to get into other units and whatnot. And it's you don't see that with, obviously, self-storage.
And that day we had no plans of that was where we were going to spend the next 4 hours, 6 hours, whatever it was to, kind of over time to figure out.
Yeah.
We were in the middle of some other things, right? That all of a sudden now, hey, we're going to go pivot and support this. So piping behind walls proposes some challenges, right?
Yeah.
And so just that one piece of, again, if it's climate controlled, you would have some piping behind the walls and stuff. If there is drywall in front of it, sometimes it's just exposed.
Yeah.
But anyway, so I think the simplicity of the units itself is really attractive, and then simplicity of adding additional units. So development-wise, if you're on a plot of land and you have, let's say, 100 units within self-storage, but also there's this piece of land that's part of the property or right across the street, and now you go add a storage facility, that is a much simpler development project than, hey, I'm going to go build 100 multifamily units.
Or even not even having to build a facility, but using it for like RV and outside RV and boat storage, to where you can easily develop that land, lay down some aggregate, rock, asphalt, whatever you want to do, and then now all of a sudden with low cost to get into it, now you have additional storage spaces for RVs, boats, and whatnot.
Yeah, that's a good point. Good point. You can have a different strategy with a simpler development time frame.
Absolutely.
Yeah, absolutely. So maybe talking on that, then there's not kind of a set strategy within self-storage. You have some of these opportunities for development and ancillary ways of income. Maybe touch on ways in which that we've seen and we're underwriting deals now that it's not so cut and dry of just, okay, this is a unit and they paid us for it. Where are some of those other income streams to be able to really squeeze out in a deal?
Yeah, so that's part of the reason why you'll see at some self-storage facilities U-Hauls. So being able to rent out moving vehicles to prospective tenants is huge for additional income. You can sell them padlocks, boxes, anything you think about when moving from a business house, whatever it is, to a storage unit. Being able to sell those products and or services can really add in a lot of additional revenue. So oftentimes when we're underwriting these storage facilities, that's one of the first things we look for. One, is there current additional revenue in place already? And then two, if there's not, what could we possibly do to be able to bring in additional income? And again, going back to the whole automation piece, which we've probably said 100 times now, that makes this really attractive, is even with selling padlocks, boxes, things like that, they have vending machines now where you can get, or vending may not be the right word, but they have different machines, technologies to where people can just go to a kiosk more or less, pay for this stuff and grab it themselves and not even have to have a person on site. So with self-storage, that's definitely that additional income from different revenue or from different sources can really add up and start to drive the bottom line and really start to drive returns and whatnot, and can make a deal go from, hey, this is an okay deal, base it, whatnot, to, hey, this could be a home run deal by us being able to implement some of this stuff. And we've also run across one recently too, where they had a plot of land that came with the facility. It would take quite a bit of work to build on it or even do outside storage. So they ended up leasing it to a cell phone tower company, and the cell phone tower company built a cell phone tower on there. And now, I can't remember the terms, if it was a 20, 30-year term, something like that, but now they're getting that income because they did have that additional piece that they were able to come in and put that cell phone tower up. Yeah,
absolutely. It's really endless opportunities of what you can do with the space and the land, and the bigger the units as well, just even driving a few dollar increase in rent goes a significant way to your overall top line revenue and profitability.
Yeah, absolutely. So what would you say, kind of going to the whole looking at a self-storage facility overall, there's definitely some tax advantages that come with buying a facility, if you want to chat about that a bit.
Compare the idea of, you start with the S&P 500, for instance, at 7% over a 25-year run rate or average. There are zero tax advantages when you're looking at it from that perspective of stocks. And real estate has always had that significant tax advantage where you're looking at depreciation. There's been bonus depreciation for several years that now is starting to run down from last year was actually, I think, the max at 100%
yeah.
bonus depreciation, and then it ends in 2027. So you think about it from a real estate perspective, though, going back to overall tax advantages, we have been paying investors a return, yet we're going to show a loss on taxes because of all the renovations that we've done into the buildings. That's us investing into the business that is a legal write-off. It's our expenses that ends up wiping out the gains that on paper gains that we show for taxes. And then the accelerated depreciation, what we were talking about, allows us to compress that depreciation to allow for a larger pass-through to investors to have more of a write-down against their W-2. So a lot of words there, but essentially what you're seeing is that you're going to show a loss through a K-1 from us as an investor, and with that you're able to write down your gains or taxes from, let's say, a W-2 job. So you could change your tax bracket even to a certain extent at that point, and it's quite an impact. And it's talked about as far as, oh, real estate's beneficial and advantageous within taxes, but when you really start to dig in and see it transpire, it's an absolute game changer.
Yeah, it's something that we should really talk more in depth about on another episode, because for us, that's one thing that sometimes when we're underwriting and we're going out and raising money from investors, that's often one thing that we'll start to market to investors is, hey, here's, we can do a cost segregation on the study, which accelerates depreciation. We can do a cost seg, here's kind of what the tax benefits would look like. And that in itself has attracted investors to our fund because they were looking for something like that because they're having a big tax bill. Maybe they sold a business or whatever has happened to where now they're looking, hey, I've got all this income and I'm going to be paying a lot of taxes on it. I need a vehicle to help reduce that tax. So real estate and depreciation, and again, doing cost seg studies is huge for individuals and even other companies, businesses.
Yeah, absolutely. It's a game changer.
Yeah.
It really is.
What would you say a takeaway is from stuff we talked about with self-storage?
I think the two highlights for us of why we're going after it, and it's fun to talk about it now because we're excited. We have a property under contract. We're going after self-storage, and we're really on the onset. So we had talked about maybe in 6 months, a year from now, revisit this and say, hey, this is why we continue with self-storage, and this is where we've done and everything like that. So it's fun to be able to talk about it, of what our strategy is, why we're going after it. We have a property in hand now. So really around automations, that is sexy. Tenant rights, within the difference in tenants' rights between multifamily and self-storage is really a big impact. And then just financially, it's an incredibly proven business model throughout years and some of the data that we were sharing there. And so with that, it's an attractive business opportunity, attractive model that has been proven for many years, and we'd like to go after and pursue that. It's attractive for us as a business, attractive for our investors to invest in the fund. So that's for the reasons that we're going after it, and I'm sure once we dig in, we're going to find 100 more of why the heck we love this. So
absolutely, man.
Excited for it.
Good job today, bud.
Thank you. You as well, my friend.
Okay, thanks, bud.